It's recorded. Okay. Yeah. So, hi, good morning, everyone. So, welcome to the very first lesson of our second half of BA 99.1. So, in the first half, you've had a good idea na of how the subject works, right? So, we have the expectation here is that you've fully mastered the fundamentals, or at least have a general idea of how journal entries, the accounts, creating financial statements, and how they work. Now, whether it's something that you're gonna be happy about or not, the second part is gonna be topic intensive. Meaning, if I had to break down the second part, it would just be into three major topics: si cash, si accounts receivable, and si PPE, or property, plant, and equipment. Now, my suggestion for you is, if you really want to perform well in the second exam and all of our quizzes, you really have to master each topic. So on my end, I will help you identify ano ba yung mga subtopics na pamatay in terms of each of the major topics. So ano yung pamatay kay cash, ano yung pamatay kay AR, ano yung pamatay kay PPE. But it's a give and take. If I tell you ito yung super kailangan yung i-master, I expect that you repeat and repeat and repeat until you can never get the items wrong. So in terms of how I expect the changes in the second part, so I'll be discussing, pero now, rather than parang finishing the whole theory and then going to exercises, I will take my time each theory, and then I will provide more examples under each theory before proceeding with the next set of theory or concepts that you need to understand. So with that said, for chapter 8, it really talks about accounting for cash. But cash is actually one of the most important assets in any company or even in your personal lives, right? So whenever you think of assets, the pinakamadaling makarelate to is, cash, the one that you have in your bank, in your wallet, or even in your mobile phone, right? But because of this, there are a lot of temptations revolving around cash. So meaning that sometimes a lot of people, or even in company setting, people would want to gain an unfair advantage. So there would be like fraud involved, so that people would steal money from the company, etc., etc. And therefore, part and parcel of discounting accounting for cash would be fraud, and how to prevent that through internal control. So chapter 8 will focus on these three things with the heavy spotlight on cash. So again, chapter 8 is all about fraud, internal control, and accounting for cash. Now, in terms of the breakdown, basically these are the 6 learning objectives. So in terms of theory, we just have to understand what is fraud, what is internal control, and then what are the principles of internal control, just to understand the overall business context revolving cash. Now, ito, lalabas to sa quizzes and your exams as theory portion. So, similarly to, enhancing quality characteristics, etc., etc., what I expect from you is full understanding and mastery under these 2 learning objectives, right? Now that we're clear of ano yung theory portion, the short prob portion, or probably the short prob or yung mga short mastery na kailangan, would be revolving around these next 2 learning objectives. So number 1, you have to master cash accounting. So there's a lot of theory, a lot of scenarios under cash, but I feel like they're more straightforward than inventory, because mas sanay naman tayo to deal with cash, right? And there's this important concept that I need you to master. So petty cash funds. So this will be the focus of our lesson for today. I really want you to fully master cash accounting, petty cash fund, and then the theory for fraud and internal control. Now, ang pamatay sa cash is bank recon, right? So ito, either it will make or break your cash performance. So this is the one na you really have to master. This is like the inventory cost flow, right? It's gonna make or break your inventory. So for cash, bank recon is the most important for you Therefore, what I'm hoping for is that nobody will get a mistake in bank recon. Kasi ito yung kailangan natin para ihatak yung grades natin in terms of both the quizzes and the exams. So basically, that's actually the overview. Okay. Sorry. So may question lang na why are we in chapter 8? Kasi chapter 7 I think was talking more about accounting in information systems, right? So the next three topics that we're gonna be talking about would be cash, AR, and also PPE. So roughly the focus talaga is cash accounting, and in Waygunt that's chapter 8 rather than chapter 6. Yun. So I hope I was able to clear that that clarification. Right? So now that we're clear in terms of our lecture overview, let's first define fraud, right? So what is fraud? So fraud in its strict definition is basically an act deceiving or misrepresenting to obtain an unjust or illegal advantage. So in the work setting, basically, it's when an employee commits a dishonest act in order to gain personal benefit at the cost of the employer. So for example, I'm a cashier in Jollibee, and parang hindi pala nakalock yung cashier. So I basically get like 30 pesos or 50 pesos para I can order like for myself like another yum burger, ganun. So that's fraud. You basically stole from the company, right? So now, what's important to understand with fraud is that there are three major elements to fraud. That these three must exist in order for fraud to happen. So number one is financial pressure. So the first element is financial pressure. So as the name suggests, the reason why you'd probably steal money from your employer as an employee, or if you're the boss and you're gonna be stealing for the company, is that there is some sort of financial pressure. Like you need money for something else, you want to buy a new luxurious good na out of your budget. So there's this sort of financial pressure in that you want to gain money, right? So that's the first element. The second element is that you're trying to rationalize the act of frauding your own company. So for example, I'm an employee, I'm a cashier in Jollibee. In my head, parang, my financial pressure is, I haven't eaten the whole day and my salary is a bit tight, right? So that's the financial pressure. Now, my rationalization is, it's just 50 pesos over like a multi-million peso or even billion peso company as JFC Corp, right? So this 50 pesos is nothing to them, while this 50 pesos is everything to me. So that's my financial pressure. I don't have food to eat. My rationalization is they probably don't need the money as much as I do. But the third element would be my opportunity. And the opportunity there is that hindi nakalock yung cashier or something like that, right? So these are the three elements of fraud, and they compose what we call the fraud triangle. Now, out of the three elements, opportunity is the most important element. Why? Because fraud cannot exist if there is no opportunity in the workplace. Meaning, pare ako, I can be a thief or parang as much as I want to steal from the company. Pero if maganda yung internal control nila over their cash, over their other assets, and that they have sufficient control to deter and detect fraud, then I won't be able to steal from the company, right? So I'll provide another example. So another example is, it doesn't mean that it's just the employee. It could also be the boss, right? For example, you're the CEO, and your financial pressure, quote unquote, is that you just want to buy a jet or something like that, and you just want to profit more from like your company, right? So basically what you'll do is that you'll create like a fake customer account, and then you'll embezzle funds from the company. So your rationalization probably there would be very different. Your rationalization would probably be, I'm the CEO, I'm the reason for the success of this company. So I deserve all these types of assets, and it shouldn't be going to the stakeholders. And then the opportunity there is that there is a lack of control when it comes to money transfers within the company, right? So every time there's fraud, you can identify these three elements that would compose your fraud triangle: your financial pressure, your rationalization, and your opportunity, right? So now the question is, we get what is fraud, right? So now the question is, how do we prevent fraud from happening? And the answer to that is through internal control, right? So the question is, what is internal control? So in terms of the strict definition of internal control, this is the slide that you should refer to. That internal control is a system established by the board of directors. And because, why did they establish the system? Because of these following things. That number one, they want the internal control to help in terms of accomplishing corporate objectives. Number two, when you have internal control, you have efficient operation with your business because it minimizes any loss of your assets. Number three, because you're able to safeguard your assets, it improves the reliability of your financial reporting. And that four, it somehow improves also your faithful compliance when it comes to applicable laws, regulations, and internal rules. So again, we identified na the major threat to companies would be fraud. And ang panglaban natin ng fraud would be internal control, which would be a system established by who? By your board of directors to accomplish these following objectives. Now, under internal control, there are 5 components and 6 principles. The 5 components, it's just good that you are aware of these and that you're able to identify which component is which. But in terms of mastery, I prefer that you fully master the 6 principles. So if you had to prioritize, mas importante si 6 principles and then si 5 components, it's more of familiarity and being able to define them. So now let's go to the 5 components. So what are the 5 components to internal control? First is the control environment. So what is control environment? Basically, when you see control environment, it just means the tone at the top. So let's review. The internal control system is created by your board of directors, basically the people that's above the company. And therefore, in terms of the control environment, it really depends on your bosses or your top management. So, ang importante in the control environment is that your top management itself values integrity. Kasi sila yung gumagawa ng control eh. Now, if your top management wants to fraud the company, they'll probably create bad internal control so that they can get into the gaps and steal from the company. So, ang importante sa control environment is the top management and their tone at the top. Meaning that if they're very strict about kahit isang peso lang yung nawala, but they'll really find like a particular employee, then that would set the tone for the rest of the environment of the company. So similarly, when you enter the workplace, you'll have different bosses. Some bosses will be lenient, some bosses will be very strict, right? So another example of control environment is academic integrity in UP. So kami, what we value as your professors is that nobody cheats. So we're very strict when it comes to cheating, right? And as you can see, it has major ramifications in terms of not only to the students involved, but also the way that, the quizzes and the exams are conducted. Unfortunately, for the people that, aren't doing something bad. So that's basically what control environment is. The second component is your risk assessment. So basically, in terms of creating your internal controls, the thing that you have to do is to identify and analyze ano ba yung mga risk factors ko within the company. And what are the procedures or how can I manage these risks, right? So that would be risk assessment. And then you'll have your third component, which would be control activities. So you've identified your risk. So basically under control activities, you basically design policies and procedures in order to address those specific risks, right? So we have the tone at the top, we've identified the risk, we've created and designed the policies and the procedures. the next component would be to inform and communicate. And therefore, walang kwenta yung internal control mo if hindi alam ng employees mo or hindi rin alam ng external investors mo, right? And therefore, the fourth component would be for you to communicate all pertinent information to both external and internal. So gets natin why internal? Because they're the ones gonna be using the policies and procedures. Bakit mo kailangan i-communicate kay external? Because again, internal control enhances the reliability of your accounting. So, therefore, people would want to more invest with you if you properly communicate na, oy, maganda yung internal control system namin, right? Another thing, external party, you want to tell the government, like, look, I'm faithfully complying to the regulations. Kasi pag hindi ka nag-adhere to the regulations with the governing body, they'll probably sanction, right? So again, information and communication is to both external and internal. Lastly, okay, we have the environment. We were able to create control activities based on a risk assessment in that we finally communicated. The last step is to monitor. So the important thing here is that you should never be complacent when it comes to your internal control. It must be monitored periodically for adequacy kasi things change and therefore you have to understand whether your internal control is working for you. So if there are significant deficiencies, then you report it at the top. So we're done with the 5 components. So again, it's control environment, control activities, risk assessment, information communication, and monitoring. Now, what are the types of questions that you can anticipate with these? Number 1, it will probably ask you which among these are components of of internal control. So and then you'll pick the ones that are not or are the components. Another type of questions that might come up. It will tell you like this what is the component of control that helps design policies and procedures? And then the answer is control activities. So those are the types of questions that you might expect or you can expect in terms of cash. So I'm just parang randomly thinking about possible questions so that you'd know how to study and you'd know how to master these types of slides, right? So next, so we're done with the components. Now, I really want you to master the 6 principles of internal control. So we'll go each slide and take a deep dive for each, but basically it's gonna be establishment of responsibility, segregation of duties, documentation procedures, physical controls, independent internal verification, and human resources control. So first is establishment of responsibility. So basically, control is most effective when only one person is delegated one task, right? So meaning, pare, yung mag-handle ng cash ikaw yung magre-record ng cash, ikaw yung mag-check kung kompleto ba yung cash receipts natin. So one responsibility, one person. So it eases the monitoring of compliance, and the important thing here is that since ikaw yung may trabaho, then we establish the accountability for that specific role. So again, an example you can find in the bottom. So one person is the one in charge of the cash register. Next, there should be a segregation of duties, meaning that related activities should be assigned to different individuals. Now, important thing to remember and to memorize, authorization, custody, and recording roles should be separated. Again, authorization, custody, and recording roles should be separated. So meaning, an example of this is, to disburse cash, a different person should approve the disbursement from the person who holds the cash, right? So meaning, pare, ako yung may hawak ng cash. If ako rin yung may role na magdi-disburse ng cash, edi ang gagawin ko, since hawak ko yung cash, I'll disburse the money to myself. Nobody would know the better because ako yung in charge sa disbursement, ako rin yung may hawak sa cash. Now, let's separate those two. Ako yung may hawak sa cash. Now, nag-disburse ako sa sarili ko. Another person is in charge of the disbursement. They'll be able to say na, wait lang, bakit ka nag-disburse sa sarili mo? So there's a check and balance. Now, there's a separate baliktad naman. What if yung si disbursement gusto niya mag-disburse sa sarili niya? So sabihin niya, uy, taga-hold ng cash, bigyan niyo ako ng cash kasi may disbursement sa akin. Now, this person who's holding the cash will be like, is there a formal documentation that authorizes you to disburse to yourself? So there's a check and balance when you segregate your duties, right? So again, authorization, custody, and recording should be separate. Next principle is documentation procedures. So basically, it just means that there should be documents that provide evidence that transactions and events have occurred. So meaning, may mga pre-numbered documents and all documents should be accounted for. So meaning, an example of this is that there's a three-way matching of purchase order, meaning the quantity ordered, with the goods receipt, quantity delivered, and the supplier's invoice. Just to make sure na walang inventory na nanakaw. So, yung quantity billed should be equal to your quantity delivered. It should be equal to the quantity ordered. So, in order to help with that, we need three documents. The purchase order, the goods receipt, and the supplier's invoice. So again, documents provide evidence lang na tama yung mga transactions that have occurred. The fourth principle would be physical controls. So it basically relates to safeguarding of assets. So actually, this is the pinaka-direct. So physical controls enhances the accuracy and reliability of accounting records. So may vault para hindi nakawin yung cash. Ilalock yung warehouse para hindi ka nakawin yung inventory. May passkey or two-factor authentication so that people can't access, sensitive information. May alarm pag binasag yung window. Merong CCTV camera across the warehouse. May time clock para sure na pumasok ka, right? So, I think in some companies, during, before they were trying to figure out Zoom, parang yung requirement, or even my mom, when she attends the convention, ang requirement sa kanila is dapat mag-picture sila before and after the Zoom meeting, and that's their attendance, right? But the physical comparison to that would be time clocks, right? So, in essence, as long as there is a physical mechanism, then that would be under the principle of physical controls. The last two would be independent internal verification, meaning that you should have an independent verifier na magre-review ng data prepared by the employees. So you don't just trust the data prepared your employees, meron ka pang separate independent internal verification. So it should be done periodically or on a surprise basis. Kasi pare ako, I'm trying to defraud the company. Now, if alam ko na every 15th may check dun sa data that I prepare, then aayusin ko, right? Pero parang I was changing the data and then biglang lumapit sa akin yung auditor. And then they say, can I see the data? Since it's surprise, I can't prepare to defraud them better, right? So it's important to do it periodically on a surprise basis. And then every time na there's a discrepancy, it should be reported to the management level. So this is an interaction of the different principles at play. So, for example, you have an accounting employee. So, siya yung nagme-maintain ng records. Versus, you have a cashier assistant na siya yung may custody. And then, the treasurer, so si accounting employee will probably create like a cash balance. Si assistant cashier will probably create a count. Ito yung official count natin. Si independent internal verification will see na, okay, tama ba yung pag-account nito? Tama ba yung pagbilang niya ng cash? And then, it should be balanced. Now, parang 1 million nung nawala. Ang gagawin ni independent internal verification or si assistant treasurer, i-report niya to sa top management na there's this huge discrepancy. Now, ang pagsususpetsahan mo because you were able to establish the rule would be either si accounting employee is changing the records or si assistant cashier is stealing from us, right? So, para lang siyang, so internal control is like finding lang kung who are the ones defrauding the company. And then finally, is that human resource control. So basically, fraud, it really depends on the people that you hire. So HR has a huge role in terms of conducting thorough background check, rotating employees so that, kware, ito lang yung role ko for 10 years. Syempre, alam ko na yung ins and outs. So, in order to make sure na you don't gain full mastery of everything, ililipat ka, i-rotate ka. Another thing, when you work, well sa amin hindi to nangyayari, but I guess when you work at a bank or like a financial company or even like an FMCG, they'll have you parang take a, I think 7 or a 10-day leave. So it's a vacation leave for you. Pero in reality, pero sasabihin naman sa'yo, pero in reality, ang gagawin nila is that it is just to make sure na they'll double check kung ano yung mga responsibilities na under you. So while you're on leave, they'll check all of the things that you're in charge of. And then pag may discrepancy, that's when usually na-uncover yung any fraudulent activities, right? So those are the things to take note of. So in essence, I want you to master the 6 principles of internal control. Mahirap to because they will provide you a real life example, probably. Again, I haven't seen the quiz, I haven't seen the long exam, pero how I can analyze creating questions for this would be like, I'll give you a scenario, and then you'll ask to categorize whether which principle that would fall under, right? So please master this. Okay, so now we know the 6 principles and the 5 components, but there are various limitations to internal control. Internal control can only give you reasonable assurance. This is so important. It only gives you reasonable assurance as to how you safeguard your assets and the reliability of your accounting records. Why only reasonable? Because there are various limitations, such as ineffective because of various human elements. Pare, segregation of duties. Okay, sounds good on paper. Paano kung magkapatid yun? So they can collude. So I don't know if you watch Parasite, the Korean film, but you should. It's a really great movie. So that's an example of like a collusion at play, right? Na even though segregated yung duties nila, since they were colluding with each other, they were able to break the internal control, right? Next, internal control can be circumvented. Again, pare, si top management, sila naman nagde-dictate ng internal control eh. So they know the best way to break out of those controls. Which is similarly to how it can be overridden by management. The size of the business, mas mahirap mag-control ng mas malaking kumpanya compared to like an employee of 3, right? And that, the last is that businesses may change over time. So, meaning, because businesses change over time, then nag-iiba yung environment. So, you have to, the 5th component of internal control, monitoring, you have to periodically check if your internal control is working. So now we're done with all the hassle theory stuff. So I will not go back na to the first 2 learning objectives of fraud and internal control. But rest assured, lalabas yan in terms of the theory portion of your quizzes or your exams. And as you can learn from, the past experiences, super importante ng theory to help you rack up points, right? So now we proceed to accounting for cash and cash equivalents. So before I proceed, are there any questions with fraud, internal control, or whatnot? Kindly give a thumbs up if everything is clear. Okay, perfect. So, okay. So for this, don't worry. As much as possible, hindi pa ganun kabigat, supposedly, this part. But what I really want us to master is that we need to fully understand the concept under accounting for cash and cash equivalents, right? And therefore, this is going to be the structure of how we understand the concept. Number one, let's understand what do you mean by cash and cash equivalents. And then, let's take a deep dive in terms of cash equivalents and then the classifying cash. Kasi maraming cash components, right? And I guess to set the tone, one of the things na I parang found funny was that during my 99, our prof, ang bungad niya sa amin is that if you think that money is cash and that's it, then you're wrong because cash is not just money, right? And with these 3 steps, let's figure out what that means, right? So first, let's go on an overview of what cash and cash equivalents are. Now, unlike inventory, wherein it has a specific standard that really defines what an inventory should be, for cash, and this is important also to take note, there is no specific standard, meaning there's no particular standard talking about cash. Ang only guidance lang ng accountants when dealing with cash is through PAS 1, paragraph 66, that provides, and this is verbatim, that entities shall classify as current asset any cash or cash equivalent unless it's restricted from being exchanged or used to settle a liability for at least 12 months. So again, this is important to understand. But simply put, let's focus on the top part first. It said na there's a cash and cash equivalents, meaning that it's more than money. Second, it should be unrestricted in use. It doesn't matter kung may hawak kang pera, if it's restricted in use, then that's not cash, okay? And then third, it should be readily available. Because if nakatali siya and you're waiting for a long non-current liability to pay for it, then that's not cash. Why? Because in its purest essence, cash should be super liquid and it should be a standard medium of exchange. If it's restricted and it's not readily available, then it loses its liquidity and therefore it should not be categorized as cash. Okay? Again, so whenever you look at any cash or cash component, if may nakita na kayo na it's restricted in use, it's not readily available, then automatically it's not cash. Again, if it's restricted in use, if it's restricted from being exchanged or used to settle a liability for at least 12 months, it's not cash. These are the exceptions to the cash and cash equivalents. So in essence, ang importanteng component ni cash is its liquidity. And that's the reason why cash is king. And that's why it's the standard medium of exchange in business transactions because of its inherent liquidity. And because it's convertible to any other types of assets. So in the financial statements, the very first line item would be your cash and cash equivalents, right? Now, the reason why we discussed fraud is because cash is easily concealed and transported and therefore is most susceptible to fraud, right? So yun lang. That's the reason why we talked about those two in the first 2 learning objectives. So now, this is our mind map of cash and cash equivalents. So in your financial statements, there will be one line item called cash and cash equivalents. Now, isang value lang yun. But that value can be broken down into 2 major components. Cash components and cash equivalents, right? And then under cash, there are 3 sub-categorizations. Cash on hand, cash in bank, and cash funds. And then sa cash equivalent lang, right? So again, there's only one line item in your financial statement, the very first line item, called cash and cash equivalents. Now, this is broken down into two, cash and cash equivalents. And then you'll have your cash equivalent, and then under cash, may tatlo ka pa. Cash on hand, cash in bank, and cash fund. Right? So let's first talk about cash equivalents. Right? So cash equivalents are honestly short-term investments that are as good as cash. So it's not the same cash na we're familiar with, aka coins or paper bills. But since they're short-term investments that, have these following unique characteristics, it's as good as cash. So what is it in its strictest definition? So cash equivalents, based on PAS 7, paragraph 6, the layman's term is that it's short-term investments that are good as cash. So what are the important characteristics? And ito, this is a non-negotiable. I want everyone to memorize all of these, right? So ST, HL, RC, IR, 3P, right? So ST, it should be a short-term, HL, highly liquid, RC, readily convertible, short-term investment that has insignificant risk of changes in value, and that it should be purchased 3 months before maturity. So again, ST, HL, RC, IR, 3P. So, as you know, may investment ka. Now, there's a lot of factors that can affect your investment. If mahaba yung investment mo, there will be huge impacts on how the value will go up or down, right? And therefore, for it to be as good as cash, it has to be short-term. Second, it should be highly liquid. And then, kailangan readily convertible siya. And then, it has insignificant risk because it's near to maturity. So how do you define near to maturity? It should be purchased 3 months before maturity. Again, it's 3 months before maturity. Huwag kayong malito sa end of period. Ang titingnan nyo lang is, kailan ko ba binili tong short-term investment na to? Next, kailan ba yung maturity niya? Those are the 2 dates na you look at. You don't look at the end of the period. You just look at, when did I buy this short-term investment, and when will it mature? If it's less than 3 months, then it probably has all of these characteristics of being short-term, highly liquid, readily convertible, and has insignificant risk of changes in value. So that's the formal definition. Now, syempre, you can expect na ang gagawin sa exercises would be parang, which of these are cash equivalents, which are these are not. So these are your cash equivalents. Number 1 is your money market instrument. So usually, money market instruments are short-term investments that are below 3 months. Okay? So that's the first cash equivalent that we're talking about. Since it's below 3 months, always money market accounts or money market investments should be considered as cash equivalent. So pag may nakita na kayong money market and then silent yung exercise when it comes to when it was purchased, when's the maturity, the assumption here is that money market instruments have a duration below 3 months. And therefore, pasok siya dun sa 3P rule natin na 3 months before maturity, right? Now, the next set would be your T-bills, T-notes, and T-bonds. So, maguguluhan kayo kasi ano ba yung treasury bills, ano ba yung treasury notes, and treasury bonds? Basically, these are investments that are usually issued by the government. Now, ano yung difference ni bills, ni notes, and ni bonds? It's their typical duration. If the investment is below 2 years, so 0 to 2 years, it's called a T-bill. If it's 2 to 10 years, it's a T-note or treasury notes. And then, if it's 10 years and above, it's called treasury bonds. Now, for T-bills, treasury notes, and treasury bonds, you have to apply the 3-month rule. Now, it doesn't matter if it's a 10-year treasury bond. If it was purchased 3 months before maturity, then it should be a cash equivalent. Other terms would be commercial paper and time deposit. But all of these, so basically, ang litmus test mo when it comes to short-term investments would be, if it is purchased 3 months before maturity, then that should be a cash equivalent. Are there any questions? If none, let's get a practical example. So ito yung magiging expectation natin in terms of types of exercises asked for cash equivalents. Basically, it will give you a bunch of short-term investments, and then lulunurin ka niya with the dates, lulunurin ka niya with the amounts, and then at the end, ang tatanong lang niya sa'yo is, what is the total cash equivalent for Castro Corp for December 31? So, let's first analyze the T-bills. So, pag T-bill, what's the definition of a T-bill? It's below 2 years. But that doesn't really matter. Basta pag T-bill, okay, it's an investment. So, what I want is the 3-month rule. So, the 3-month rule is, I look at the purchase date, November 1, and then I look at the maturity date, January 31. Hindi yung end of period. Please, please, please. Huwag niyo titingnan yung end of period when you're looking at the 3-month rule. Ang tinitingnan niyo sa 3-month rule is date of purchase and maturity date. So, let's compare. November 1 to January 31. November, December, January. 3 months. It's within 3 months. Therefore, this 750,000 should be a cash equivalent. Next, it's a time deposit maturing March 31, purchase December 1. So again, second learning from like our quizzes and our exercises. Pwedeng pagbalik ta rin. So you have to understand what's being given. Maturing March 31, this is the maturity date. Purchase December 1, this is the purchasing date, right? So now let's compare. December, January, February, March, 4 months. So since this is 4 months, this is not a cash equivalent. This is probably other current assets. Next, money market account. O, magpapanik na tayo kasi walang date. But again, dito papasok yung theory natin na a money market account has a lifespan of below 3 months. Therefore, automatic, it's within 3 months. Last, it's a 10-year T-bond. So isipin nyo, 10-year. So baka hindi ito current asset. But again, 3-month rule. So, maturing February 14, purchase December 20. So, December. So, January 20, February. So, mga 2 months lang, right? So, it's within 3 months. Therefore, it's cash equivalent. So, in order to answer these types of short probs, the answer here is 750 plus 50 plus 50 or 850,000. So, again, in summary, you have to master these names. If may nakita kayong money market instrument, T-bill, T-notes, treasury bonds, commercial paper, time deposit, you always ask yourself, does it fall under the 3-month rule? Na is it purchased 3 months before maturity? And if yes, then they would be cash equivalents because they are short-term, highly liquid, readily convertible, that has insignificant risk, and it's purchased 3 months before maturity. So, do we have any questions between about classifying cash equivalent? Are there any questions? Kindly thumbs up if everything makes sense. Okay, good. So, before we proceed to cash, I want to tell you na you really have to be good at cash equivalents kasi ipaghahalo na yan with the cash components that we'll be discussing later. So, sa cash equivalents, zone in on it, make sure you understand everything, and then you proceed na to cash, okay? So, we're done classifying cash equivalents. Let's classify cash. Now, cash is more than money, right? And to prove to that point, we have three subcategorizations. You have your cash on hand, you have your cash in bank, and you have your cash fund. And then ito yung different types of components that will fall under cash. So lahat to are cash with different rules, different concepts, etc. etc. So now, para hindi tayo ma-overwhelm, let's focus first on cash on hand, and then let's master all of these concepts. Then next we go to cash in bank, and then finally sa cash fund, right? So, cash on hand pertains to undeposited cash collections. So, meaning, ito yung mga pera na not in a fund, not in the bank. It's literally undeposited cash collections. Under cash on hand, we have 7 concepts. Bakit naka-zero si money? Because this is the concept of cash that we're all familiar with. And then we'll talk about different kinds of checks. And then finally, the money order. So one by one, I want us to master each of these 7, right? So nasa cash on hand tayo. Under cash on hand, there are 7 concepts you need to master. Number 1, coins and currencies are probably the easiest, right? Now, money refers to coins and currencies that are in circulation and legal tender. Legal tender meaning, yun yung coins and currencies na tinatanggap nung country na yon, right? So, money is the standard medium of exchange in business. So, coins, like Philippine peso coins, and bills, right? Peso bills. So, here, remember what my prof said before, that cash is not equal to money, it's more than money because literally it's like 1/7 of what comprises cash on hand. Cash on hand pa lang yun. You have cash in bank, you have cash funds, right? So money, clear. These are coins and currency. Now, ang mahirap sa cash on hand is how well you understand checks. Could I just have like a quick survey? Can you react if you've ever written a check or you've ever received a check from anyone? Thumbs up if you have. Okay, that's good. Okay. So actually ako, honestly, wala akong masyadong experience cashing out checks. So kasi I think it's like i-Gcash ko na lang siya or whatever. But for this particular lesson, we really have to master what a check is. So in essence, a check is has 3 parties, right? So this is the check. And then you can see na pay to the order of Juan de la Cruz for 100,000 pesos. Ito yung date, ito yung amount, and then ito yung signature. Now, what are the 3 parties to a check? Syempre, may nagsulat nito, right? Let's say si Jose Rizal yung nagsulat nitong check na to. The one who made this check, the one who hand-wrote this check, is what you call your payer or your drawer, right? Your payer or your drawer is the one paying the money or maker of the check, okay? Now, yung pera mapupunta to the order of Juan de la Cruz, right? So si Juan de la Cruz is the one receiving the money. So in essence, si Jose Rizal na payer will give 100,000 to the payee, Juan de la Cruz. Now, who will facilitate this exchange? It's a BDO check. So probably, the one who will facilitate the issuance of the money, si BDO. So BDO is the bank and you call the bank the drawee, right? So kung anong logo yung nakalagay dyan, yun yung drawee bank, right? So again, what are the 3 parties? Si payer is the one paying the money or quote-unquote the drawer kasi siya yung nag-draw or gumawa or nag-make no check. Si bank is what you call the drawee kasi siya yung magfa-facilitate ng transaction. And si pay yung makaka-receive ng money na Juan de la Cruz. So when I ask what is a check, the formal definition is it's the drawer's written order to instruct the bank, which is the drawee, to pay a specific amount from their checking account to transfer to the payee or the receiving entity. Right? I hope this is clear. Please wag tayong mawala. Right? So, again, si drawer, gagawa siya ng written order in the form of a check. Sasabihin niya, hey BDO, bigyan mo ng 100,000 si payee. Subtract mo sa checking account ko. Bigyan mo siya ng 100,000. So, ganun, that is a check. Now, let's look at it na, okay, na-receive na ni Juan de la Cruz yung check, right? How does Juan de la Cruz get cash from this piece of paper? He has two options. He can deposit the check, meaning papasok yung check sa bangko niya. So may account siya in any bank and then i-deposit niya yun, tataas yung balance niya. So for example, may BDO account siya na 10 pesos yung laman. If nag-deposit siya ng check na to, magiging 110. Ay 100,010, right? And or pwede niyang i-encash. Meaning, ito yung check, bigyan niyo ka ng 100,000 in cash, right? Now, why is it important to understand how you get money? Because there is nuances to this. Kapag i-deposit mo lang yung check, the check will be added to your banking account and you can deposit a check to any bank. Meaning, if I receive this BDO check, I can go to a BPI bank, a Union Bank account, a Metro Bank account, an RCBC bank, and then I'll tell them, can you deposit this to my account? And then they can process it, right? You can deposit any check to any bank. Pero, you have to take into account that there would be clearing times. Meaning, kung kare, BDO yung check, and then I deposited it to BPI, then that is not the same bank. So, 3 days pa magre-reflect sa account mo. Pero kuwari, BDO yung check, tapos dineposit mo to your BDO account, magkakaroon ka ng same day, 1 day clearing time for it to reflect into your account. So that's how you deposit. Another way is for you to encash. Now, the check will be given to you as cash. So basically, pupunta ako sa cashier, and then ito po yung check, and then bibigyan nila ako ng 100,000. Now, you can only encash checks on the specific drawee bank. Meaning, I can't encash this BDO check. Like, I can't go to BPI and say, ito po yung check eh. Pwede nyo pa ba bigyan ng 100,000? Hindi. It has to be the same drawee bank. Are there any questions regarding deposit or encash? Please, wag tayong mawala. The reason why I'm taking so much time for this is importante rin to sa bank reconciliation. Right? So please ask your questions now. Okay. If none, so I mentioned clearing. What is a bank clearing? Basically, it's a process of settling transactions between banks. So let's look at the same bank. So pag same bank, meaning I got a BDO check and then I went to a BDO bank, then that's the same bank. So it takes 1 day. So what will be the process? Meaning, ito yung magiging process. BDO will check the drawer account for sufficiency. Titingnan niya, si Jose Rizal ba, may 100,000 ba talaga yung laman ng account niya? If meron, then I will subtract 100,000 from Jose Rizal's account and then I will transfer that 100,000 to Juan de la Cruz's account. So, mabilis lang. Same bank eh. May records ako ni Jose Rizal, may records ako ni Juan de la Cruz. So, ita-transfer ko lang yung 100,000 from Jose Rizal to Juan de la Cruz. Kaya 1 day. Now, kapag different banks, 3 days. Kasi, dalawa yung banks na mag-uusap. So, in this scenario, let's say, ako kasi, ang preferred bank ko, Union Bank. Because, you can take a picture of the check and then it will reflect in your wallet. Well, not that I'm promoting or not that I'm sponsored by Union Bank, but it's super convenient. So, basically, parang Union Bank, so basically yung ang nangyari, si Jose Rizal gave a BDO check to Juan de la Cruz. Now, si Juan de la Cruz has the Union Bank app. So, pinicturean niya. So, ang promise ni Union Bank, within 3 days or some sort of clearing, you'll be able to reflect that to your account. How will it work? So, si Union Bank, pag nakita niya yung picture ni Juan de la Cruz, sasabihin niya, hey, BDO, may BDO check raw na was deposited to Juan de la Cruz's Union Bank account. Check mo nga if this is proper. So si BDO, again, will check Jose Rizal's account. Sabihin niya, meron nga siyang 100,000. So, babawasan ni BDO yung 100,000 sa BDO account ni Jose Rizal, and then may 100,000 na si BDO, ita-transfer niya kay Union Bank. Sabi niya, ito na yung 100,000. Si Union Bank, makaka-receive siya ng 100,000. And then, okay, itong 100,000 ilalagay ko dun sa pay account ni, or yung Union Bank account ni Juan de la Cruz. Kaya, mas matagal, right? So, again, if you deposit, you can deposit to any bank, but it will have different clearing days. But you can only encash with the specific bank. Because, kuwari, pumunta ako sa BPI, wala naman silang way to verify kung may pera naman talaga si Juan de la Cruz, right? In the BDO account. Kasi, BPI sila, wala naman silang hawak sa BDO accounts, right? So, that is basically how checks work. So now, there are so many different types of checks and so many scenarios. So let's master. First is a manager's check or a cashier's check. So this is considered good as cash because the bank guarantees that the check is funded. So as you can notice, this is an example of a manager's check. Unlike yung Juan de la Cruz, it's printed and then meron pang signature ni bank. Now, ang ibig sabihin nito is that ang gumawa ng manager's check, yung manager or yung cashier ng bank. Ang ginawa nila, chinek na nila yung account and then kinuha na nila from that account and then they can guarantee na, sure ako, may pera dito. So, manager's check guaranteed by the bank. So, it's considered as cash. So, pag may nakita kayo sa mga problems, manager's check, cashier's check, that's cash, right? Next, ano naman yung certified check? Well, honestly, it's the same as manager's check. It's just that it has different ways or etc. But it's the same. A certified check, the bank already verified that the account has sufficient funds. So the difference here is that sometimes certified check, handwritten yun, and then may stamp lang na certified. So ang difference is that sa certified check, fini-freeze lang nila yung pera sa account, hindi pa nila tinatanggal. You don't have to know all of those nuances. Ang importante lang to understand is that manager's check, cashier's check, certified check are all verified na sufficient. May laman yung account ng drawer. And therefore, both of them are good as cash. Next, you'll see a traveler's check. Now, this is so weird. I've never seen this happen. But for theory, basically, it's considered good as cash because you paid for them in advance before your trip. So basically, what you can imagine is like, kuwari, may US trip ako for my consulting. I go to my PH bank. I give them, let's say, 50 pesos. Joke, mga 10,000 pesos. And then, I ask them, can you give me a USD traveler's check? So, instead of giving me USD, they'll give me a note like this. When I go to the US, I proceed to present it to like a US bank. They'll convert this USD traveler's check to get in cash to actual dollars at a lower rate. So again, if you see traveler's check, it's good as cash. Now, this is the complications na. What if it's an unreleased or undelivered check? What do I mean by that? Gumawa na ako ng cheque, pero hindi ko pa pala nabibigay doon sa payee. Kasi si payee naman yung magpe-present sa mga banks eh. So again, please take note. It's a drawn and recorded check, but it's not given to the payee before the end of the reporting period. Ang importanteng date to look at is the end of the reporting period. So let's look at it from the POV of a drawer, right? So probably may utang ka. And that's why you want to issue a check. Therefore, when you make that check, your journal entry would be debit accounts payable, credit cash. Because in your head, nag-issue na ako ng check, dapat bababa na yung accounts payable ko and bababa yung cash ko kasi babawasan yung account ko sa bank eh. Now, At the end of the period, you realized, shucks, nagawa ko na yung cheque pero undelivered pala siya. So meaning, hindi pa nakuha yung pera ni payee. So, we have to make an adjusting entry. And this is the first adjusting entry we need to make. If you realize that it was under-delivered, you have to adjust it back or you have to restore to cash. So, debit cash, credit accounts payable. So, yung adjustment mo parang reversal lang nito. Kasi, hindi mo pa nabigay sa kanya. So, how can they encash it? Right? So, meaning, may liability ka pa rin, pero hindi ka nabawasan ng pera. Kaya, debit cash, credit AP. So now, we're in the POV of payee. Ano yung journal entry kay POV of payee? Wala. Because in their heads, may utang pa sa akin tong guy na to. Wala naman ako na-receive na check eh. So walang effect sa akin, right? So it was still undelivered. Thus the drawer has an outstanding accounts payable. May utang pa siya sa akin, right? So let's look at this example. May 5,000 check. Ginawa raw niya December 1. Pero by the end of the period, which is December 31, it's not yet delivered. So you have debit accounts payable, credit cash of 5,000 during December 1. Na in your head, babawasan ko na yung pera ko kasi babawasan na yung liability. Pero in December 31, I realized, shucks, hindi ko pa pala nabigay. Therefore, the entry that's more important here is that debit cash, credit accounts payable. Any questions? Kindly raise your hand if you have. If not, I'll proceed. So now, we have undelivered checks, right? So we're done with undelivered checks. Next is post-dated check. So a post-dated check is a drawn and recorded check. Nasulat ko na, finally nabigay ko na kay payee. Pero, it bears a date subsequent to the end of the period. Meaning, nabigay ko na ng December 25 yung check. And then, assume natin yung end of period December 31. Pero ang nakalagay dito sa date na to, April 10. Kaya siya, post-dated. Kasi dapat, the normal one is that kung binigay ko sila ng December 25, ang nakalagay dapat dito December 25. Right? So, pag post-dated check, it's a date subsequent the end of period of December 31. Now, the problem is, kwari, na-receive ko ng December 25. Punta ako sa BDO. Pwede ko bang i-encash to? Sabihin nila hindi. Kasi April 10 pa po yung, yung issuance date. And therefore, you can only deposit or encash this check on April 10 onward. So technically, yung pera, na kay maker pa. Hindi kay na kay Maria Leonora. Gets? So, same. When you make the check and you deliver it, you thought na, okay, bawasan na natin. So, debit AP, credit cash. But, if it was post-dated, then you didn't really lose the money because it's post-dated. So, similarly, you have to restore to cash. Debit cash, credit AP. So, pare, you made a check na 10,000 dated January 4. Pero, nagawa mo na at nabigay mo na kay payee ng December 25. So, when you made the check, you made this journal entry, debit accounts payable, credit cash of 10,000. When it was post-dated, you have to adjust this. Debit cash, credit AP. Because again, yung pera nasa iyo pa hanggang January 4. So, at the end of the period, pera mo pa rin yun. Right? Hindi mo lang siya magiging pera if by January 4, in-encash or dineposit na ni payee. Any questions? Kindly raise your hand if none. If none, we go to stale check. So, we're done with undelivered check, meaning check na hindi pa nabigay kay payee. We're done with post-dated check. Binigay mo nga pero post-dated. Now, number 4 is stale check or check outstanding for too long. So, it's a drawn and recorded check already given to the payee. Pero, si payee yung may problema. Hindi niya dineposit or in-encash. Nasa kanya lang, nilagay niya lang sa bag niya. So, if hindi niya dineposit or in-encash within a reasonable time, so, ang super important to remember here is 6 months. If hindi pa nila ginawa by 6 months, it will be considered a stale check. And from the point of view of drawer, so gumawa ako ng check and delivered. So again, debit, AP, credit, cash. Pero nung nalaman kong stale yung check, edi hindi na niya mai-encash yun forever. So now I have to restore back to cash. Pera ko pa rin yun. Debit, cash, credit, accounts payable. Now let's look at the POV of the payee. Na-receive mo yung cheque. So sabi mo, nice, naka-receive ako ng cash. So debit, cash, credit, AR. Pero you let 6 months pass. So pumunta ka sa bangko. After 6 months, sabi po nila, ma'am or sir, sorry po, stale na po yung cheque nyo. Kung gusto niyo pong gawin to, pa-issue nyo na lang ulit dun sa gumawa. Therefore, since stale yung check, then may accounts receivable, you have to restore back your accounts receivable. So debit accounts receivable, credit cash, right? So example, 7/5 check dated May 31, now December 31, hindi pa rin niya ini-encash. So, from the POV of the drawer, ito yung journal entries mo. Debit AP, credit cash, 7/5. Pero we have to restore to cash kasi ito stale. Kay payee, you received cash nung May 31, so kala mo pera mo na. But because of your negligence, hindi. You have to reverse back, restore the accounts receivable. So after nito, kung may stale check ka, hihingian mo ulit si drawer na pwede bang gumawa ka pa ng isang check? Promise ngayon, i-encash or deposit ko na. Last, when it comes to checks, you can also have bounce check. So, I don't know if naabot or if you're into or if you watch yung mga Philippine soap opera. Pero alam niyo yung mga parang usual trope na parang ano yun, langit lupa relationships, tapos yung mayaman na family, parang they're gonna pay off the poor person or the yung minamaliit nila na ito blank check. Sulat mo kung ano yung gusto mo para lang layuan mo yung anak natin. So, paano kung sinulat nila doon as like 1 trillion pesos, right? I'm sure na even though ganun kayaman yung mata pobre, wala silang pera na ganun amount, right? And therefore, if you write a check na more than the amount of money that you have in the bank, that will bounce. And bouncing checks are actually illegal and pwede kang kasuhan, right? So it's a drawn and recorded check already given to the payee, but it's an invalid check due to account insufficiency. So if you see an NSF check, a DAIF check, or a DAUD check, it just means that it's a bounce check. What is NSF? Non-sufficient funds. DAIF, drawn against insufficient funds. DAUD, drawn against uncleared deposits. So, in terms of the POV of the payee or yung nakatanggap ng pera, when they first received the check of like 1 trillion pesos, they'd be like, oh wow, parang debit cash, credit AR. I got so much money. But then, binigay ko kay bank. Binalik sa akin ni bank. Sabi nila, ma'am, sir, nag-bounce po yung check. So therefore, I have to revert back. May utang pa siya akin 1 trillion pesos of accounts receivable. Pero wala na akong cash na 1 trillion pesos, right? So please be aware na may bouncing check. So when you issue your check, you have to make sure that for the next 6 months, may enough money ka in order to make sure na mababayaran mo yung whoever si payee, right? So, pare, yun, may 1 million check ka dated May 31, but it bounced on July 31. So, si payee or yung nakatanggap, debit cash, credit AR of 1 million, pero nag-bounce raw. So, once I found out na nag-bounce, debit AR, credit cash, or I adjust, i-reverse ko lang. And then lastly, you have money order na, I don't know, I haven't seen an actual example, but it's related to the post office for some reason. But anyway, it's considered good as cash because it's a certificate usually issued by a government that allows the stated payee to receive cash on demand. So we're done with the first, cash on hand. So it's considered cash. So undelivered, so ito yung summary, right? So ito yung summary. So checks, managers, cashiers, certified, travelers check, all considered cash. Kapag unreleased, you have to restore to cash if you're the drawer. If it's post-dated, so kindly make sure to master this, right? We're done with cash on hand. Let's go in cash in bank. For cash in bank, you have 4. You have checking account, savings account, bank overdrafts, and compensating balance. So, let's go first with checking account. I'm sure meron naman, probably a lot of us, meron tayong mga online banks, right? And you'll see na may dalawa. Checking account, savings account. The checking account has a lot of names. Demand deposit, current account, commercial deposit, etc., etc. What's important to note here is that your checking account is non-interest bearing. Meaning, pag iniwan mo lang yun, hindi siya tutubo ng interest. So deposits are covered by deposit slips and funds are withdrawable by demand. So typically, checking accounts have a higher maintaining balance, right? Savings account are interest bearing and meron siyang usually kasamang passbook wherein your passbook is required every time there's a deposit or withdrawal. So it's still withdrawable by demand. Kaya sila pera. Or that's why cash sila. Because it's unrestricted and readily available. So it's typically have a lower maintaining balance. So now, let's focus on the two hard concepts. Bank overdrafts and compensating balance. So a bank overdraft would mean that a checking account has been overdrawn and shows a negative amount. So for example, may checking account ako. And then, January, so parang I wanted to work on my New Year's resolution. So nag-avail ako ng gym membership. And then, back and forth ako pumupunta sa anytime. So, hindi ko na-realize, 100 lang yung amount ng checking account ko, pero I already spent more than $205. So, I actually have an overdraft of 105. I have a negative amount. Now, the question is, how do you treat this negative amount in your bank? Generally, if it's a bank overdraft, generally, it's a current liability. Why? May utang ako sa bangko. So if no additional information is given, if you see a bank overdraft, generally, it's a current liability. Now, there is an exception, and this is something that you have to master. If it's repayable on demand, or it's part of your normal cash management, and you have another account in the same bank, then you can offset this. So what do I mean by this exception? Kuwari, in my BDO, I have a negative 10,000 bank overdraft. Now, in scenario 1, I have an account in BPI of 30,000. The question is, can I offset this? No, I can't offset. So in my financial statements, I will have 10,000 in current liability represented by the bank overdraft, and then 30,000 in cash represented by money in BPI. Now, BDO, scenario 2, may second BDO account ako at 30,000. Since I have a same bank, different account, I can offset. That's the special rule. So 30,000 minus 10. So now in my financial statements, I have a cash net of overdraft of 20,000. Again, this is a special rule. The default is kung walang binigay sa problem, current liability siya. And pag repayable on demand, it's deducted from cash in cash equivalent. Finally, we have compensating balance. So, compensating balance, so kuwari, gusto mo mag-open sa BPI. Merong mga maintaining balance silang nilalagay. So basically, if you want a time deposit or a demand deposit, there is a minimum balance required or a compensating balance. Now, this compensating balance can be legally restricted or not. So how do we treat compensating balance? You ask yourself, is the compensating balance legally restricted? If no, then it's a cash and cash equivalent. So it's informal or without formal compensating balance agreement. However, if it's legally restricted, meaning it has a formal compensating balance, this compensating balance is a current asset or a non-current asset. So basically, we're done with checking account, savings account, bank overdrafts, and compensating balance. The last is cash funds. So cash funds are those cash that is set aside for a specific purpose. So may fund ka for payroll, may fund ka for dividend. How do you classify or categorize cash funds? You ask yourself, what is the purpose of the fund? If the fund is for current purposes, like you'll have to pay dividends for this month, payroll, petty cash, then it's a cash and cash equivalent. If it's non-current, like for example, nag-set aside ako ng cash in order to settle a bond that's due 12 months from now, then that's a non-current liability. So that ends our cash funds. So now we're able to fully understand all the concepts under cash, be it cash on hand, cash in bank, and cash fund. So now, my expectation is because of this discussion, we're masters na in cash equivalents, in cash, right? So all of these concepts. So remember na, simply put, what makes cash cash is it's highly liquid, it's unrestricted in use, and it's readily available. So now, I just want to quickly go to petty cash fund para bank recon lang talaga yung focus natin on the second exercise, right? So, petty cash fund is part of the cash funds. It's part of the current cash funds. You have petty cash funds. Why do you have petty cash funds? Because cash is the most susceptible to fraudulent activities. So how do you prevent fraud from happening? Well, you'll apply your 6 principles of internal control, and then you'll have your cash receipts control and your cash disbursement control. For the interest of time, I will discuss this after ko i-discuss yung petty cash fund para lang for the people in class, they can still attend the discussion in petty cash accounting. So you have other internal control systems like the voucher system and the electronic fund transfer. But the super important here is your petty cash fund, wherein it's a fund used to pay relatively small amounts that can economically and conveniently paid through a check. So I know it's too much to understand. So let's kindly watch this video. Kindly let me know, thumbs up kayo if you can hear the audio, right?
Accounting for petty cash. Petty cash is used in companies for small dollar item purchases that need to be paid in cash. Usually, petty cash is used for items such as purchasing coffee and donuts for meetings, postage, office supplies, or other miscellaneous expenses. Most companies choose to have a petty cash fund because it helps to eliminate multiple journal entries for small dollar amounts. A company must decide how much they want in their petty cash fund. Petty cash funds can range from $50 to $1,000, or really any amount that the company decides. When a company decides they need a petty cash fund, it must be established with a journal entry. For a $200 petty cash fund, we would debit petty cash and credit cash. The company is effectively writing a $200 check that will be cashed to make the starter money for the petty cash box. The check is then given to the employee who is the petty cash custodian. That employee takes the check to the bank and gets the actual cash to put into the petty cash box. Then, throughout the month, when employees need to use petty cash for various purchases, they will get the cash from the custodian and in return give the custodian the receipt for the expenses. The custodian is responsible for tracking the money used and the receipts returned. At the end of the month, the custodian reconciles the petty cash fund by totaling the receipts and counting the remaining cash in the box. If no errors were made, the total receipts received and cash remaining should equal the starting point of the petty cash fund. The information is then given to the accountant to prepare the journal entry. In the journal entry for replenishment, a debit is made for each expense and cash is credited. We are not crediting petty cash, but instead crediting cash because the accountant is going to write a check for the amount needed to replenish the fund back to its starting point. The process then repeats itself and the custodian takes the check to the bank to get the cash needed to put back into the box. The petty cash is now back at its starting point of $200. Now, again, throughout the month, employees can come and request money and provide the receipts. The custodian tracks all of the activity. However, this time, when our custodian reconciles the petty cash at the end of the month, there is a $2 shortage between the cash needed and the total of the receipts. When that information is given to the accountants must add in a debit to cash over and short to account for that $2 shortage. If there was an overage, then it would be a credit to cash over and short. Again, we are writing a check for only the amount needed to replenish the petty cash fund back to its $200 starting point. At this point, the process would repeat again, and the custodian would refill the petty cash box, and it would go on for the next few months. Now, lastly, I want to review with you a summary of the journal entries for establishing the petty cash fund and replenishing the petty cash fund. Note that we do not credit petty cash, but instead credit cash when we are replenishing the fund. And we use that cash over and short account to balance out when our receipts and our cash needed are not the same amount.
There. So actually, I'll link this video to the Facebook group. In 99.1, sobrang bagsak ako dun sa PC. Anything related to PCF. But then during the boards, I watched that video. And that super simplified the whole process for me. So let's just summarize what she was saying. Right? So in essence, you have petty cash funds because you have these small things that you want to spend like ball pens, cookies, tokens. And then hassle naman if you issue checks, right? And therefore, what we do is have a fund and then isi-set ng management, let's say $200, right? To establish the fund. So in terms of journal entries, we have debit petty cash fund to establish your fund, credit cash para i-transfer yung cash to the petty cash fund account. Now, when you make payments from the fund, there are no entries. Super important. And then, ang importante dito is replenishment. Meaning that you'll have various expenses, various receivables, various supplies, but then your credit should be cash, not petty cash fund, right? Because during the replenishment, custodian will check the receipts and issue a check of the missing amount to replenish. Now, this is an example of replenishment scenario 2.A or if it's balanced. Wala tayong problema. So, when you replenish, you compare two things. The accountability and what's accounted for. The accountability is the size of the petty cash fund. Meaning, kware, ang dinictate ng management is we should have 100 pesos in petty cash fund. That is the accountability. Now, accounted for would comprise your cash on hand and the various receipts that you have on that box, right? So it could be cash on hands, expense receipts, unused supplies, and even receivables from the people that borrowed money from that petty cash fund. So what you will do, you will compare your accountability or the size of your fund and those that you're accounted for. So in this case, 100 to 100 to, so it's the same. So basically, you have various expenses, debit 50, various receivables 10, various supplies 10, credit cash of 70. Right? Because why 70 not 100? Because may 30 ka pa on hand, right? So 70. Now, scenario 2. Let's say your expenses 48 lang. Meaning there is a shortage. Why? Because 98 lang yung na-account for mo, but you know that it should be 100. So when the petty cash fund is higher than what you've accounted for, there's a cash shortage. And therefore, you have a cash over short debit, right? So usually what you need to do is first you credit the cash of 70. And then you list down mo yung expenses, receivables, and supplies. And then you'll ask yourself, nag-balance ba? If there's a missing debit, that's a cash over and short of 2. And that cash over and short is treated as an expense. Baliktad pag overage. Pag overage, mas malaki yung na-account for mo compared sa size ng PCF. And therefore, you will have a credit cash over and short of 5, which would signify a revenue, right? So in summary, if it's cash shortage, your PCF is larger than what you've accounted for, and therefore you can expect a debit of cash over and short. And if it's a cash overage, your PCF is less than you're accounted for, so there's a revenue in cash over and short. However, this only applies if the shortage or the overage is immaterial. Immaterial. If it's material, then iibahin mo lang yung pangalan. It's a receivable from custodian and payable to custodian. So this is a summary. So this is something that you have to master. Don't worry, I'll go over PCF pa rin next session. And the last set of entries would be 3.A, 3.B. Kuwari, napapansin nila na we need to increase the petty cash fund. So pag nag-increase ka, debit PCF, credit cash. Pag nag-decrease ka, debit cash, credit PCF. So let's look at examples. So the fund was replenished but it contained the following. Cash on hand of 120, delivery expense of 2.4, etc., etc. So in PCF, replenishment, your first step is let's get the credit of cash. So we know that the PCF is 5,000. So 5,000 minus the cash on hand of 120, it will give you your first account. credit cash of 4,880. And then you just look at the receipts. So you have delivery expenses, so debit 2,400. You have postage expense, debit 1,350, and you have miscellaneous expense. Now, if you add all the debits and compare it to the 4,880, you'll notice that there's a missing debit. And that missing debit will be your cash over and short of 100, which is an expense account kasi it's debit, right? So we know that there has been a cash shortage. Why is it cash over and short? Because 100 is within the is below 500, therefore immaterial siya. Let's look at this second example. It said na material raw all changes. So again, step 1, let's get the credit of cash. Yung cash on hand natin is 90. We know that the PCF is 5,000. So step 1, 5,000 minus 90, we get our credit of cash of 4,910. And then we list down again the receipts. Debit delivery expense, debit postage expense, debit entertainment expense, debit miscellaneous expense. Now, if you compare all the total of your debits and your total of credit, merong missing credit. So, pwedeng cash over and short. However, since it's material, rather than naming it cash over and short, it's called payable to custodian at 140. And then lastly, this is an example if, kware, na-realize nila, you know what, our petty cash fund, taasan natin ng 6,000. So, debit petty cash fund, credit cash of 6,000. So, actually, that ends our discussion for today. Don't worry, I'll rediscuss PCF again next meeting after bank recon. Pero my priority lang is, dapat alam nyo na how to account for PCF so that you can help answer the exercises na. And then, next session, let's focus on bank recon. That formally ends our lesson. Are there any questions or clarifications with any of the topics? Kindly thumbs up if everything is okay. Okay.